A very good morning, good afternoon. Welcome to HYCM's live trading webinar, FX Week Ahead, live market analysis with myself, Giles Copton, the Chief Currency Analyst here at HYCM. Hope everybody is doing well and taking care of themselves. I'm just going to run through the quick disclaimer, just as we're looking at different entries, exits, etc. The whole purpose of this webinar is to educate yourselves so you can see how someone with a professional trading background goes about analysing the markets, so you can sort of learn from that, and hopefully it will inform your trading and help you make better trading decisions. So as we go through, that's that covered. So just going to give folks a moment to come in, just give 30 seconds or so. Hope everybody is doing well and taking care of themselves. So here's a quick look at the sentiment as we start the day, as most folks are in now. So as we look at starting the session, I'm just going to run through to the main screens here, just to show you. Right. Now, looking at markets, the market has started with a positive risk-on sentiment. So let's just run through how we analyse risk-on sentiment. First thing you want to do when you're looking at risk sentiment, look at the equity market. These are the US futures markets, and we have European futures markets here in the DAX and the Euro and the ASX 200 futures markets. You can see that equity markets, futures markets, are higher across the board, with the exception of the FTSE 100, which is being pushed and pulled around on Brexit negotiations at the moment. So equity markets are higher, the VIX is lower. So this tells us some good signs that sentiment could well be positive in the markets. Now we have a look at commodities, and we can see that as we look at commodities, that we've also got crude and Brent both broadly higher on the day. So the oil complex is higher. Copper futures are supported. We're seeing mixed signals from gold and silver, with gold weakening at the moment, but that's not a big surprise in the current market sentiment. Looking at bond yields, we can see that bond yields are sort of been ticking higher across the board. Not major ranges, but we do have positive sentiment in the bond market. Yields are higher. So we can see that futures are higher, commodities are higher, bond yields are higher. So now looking at the currency space, we also see that the commodity currencies, the Australian dollar, New Zealand dollar, are broadly higher. Canadian dollar is mixed, but definitely the Aussie and the New Zealand dollar pushing higher on the session. We're seeing weakness in the yen, the safe haven yen, which you'd expect. Some strength in the Swiss franc, which is a little bit surprising given the fact that equities are supported to the upside. We also are seeing weakness in the US dollar. So as we start the session, we can see that the sentiment is broadly positive for risk. Now, there are three reasons for that. First of all, the positive reason for risk sentiment is this. The US stimulus talks have been making some good progress over the weekend. Reason number one. Reason number two, Brexit talks have been extended. That extension is positive for risk sentiment. That's why we've seen a lot of strength in the pound. If you just take a look at the pound US dollar pair, you see the pound gapped higher and then ran away with the gap. So that shows strong sentiment in the pound, and the pound is the strongest currency on the session. I'm covering Forex Live today, so I've been doing the analysis here on Forex Live, and you can see here that the pound has been leading the pack against the US dollar with a strong 1.52% return against the US dollar, and that's pushing to fresh highs now as we speak. The third piece of good news is that the US expects to immunize 100 million people by March. Now, the US population is around 300 million people. So we have, by spring, about 100 million, that's a third of the population. Now, given the fact that coronavirus really impacts the elderly the most, and though they're very sick already, those with pre-existing health conditions, this is pretty good, really, in terms of the amount of vaccines that the US has managed to get out. 100 million, pretty strong. So that strong vaccination program is also boosting risk sentiment. So that means we expect risk sentiment to carry on. So here's a few things. We are expecting, as long as Brexit sentiment remains, any retracement back to that 13300 level, we're expecting to find buyers. Looking at the Aussie New Zealand dollar and the New Zealand US dollar pair, the US dollar pair, any retracement back down to that 0.7090 region, we expect to find buyers. And as long as this sentiment remains, any retracement back down to, let's just go down to the 30-minute, any retracement back down to that 0.7540 region, we expect to find buyers in the Aussie and US dollar. So that's how sentiment is going at the moment. That's the main aspect to be looking at. Now, there's something else that I wanted to draw your attention to. Now, I was doing this analysis on forexlive.com, so I'm just going to run through that with you because it's simpler to do that by looking at the analysis I've already done rather than redo it all over again. And the thing that to look at here is the US dollar. There is quite a lot of dollar weakness that's taking place in the market, and that could well carry on. Now, I'll just show you the rationale. So that's the technical setup. We'll look at that in a minute. Now, the US dollar has some very strong weak seasonals. So this is something to be aware of for the week ahead. Now, if you take a look at this, this is the dollar index over the last 50 years. And can you see that the dollar index has a tendency to lose value in the month of December? Now, the reason the dollar tends to lose value in the month of December is very specific. It's not a coincidence. Essentially, what happens is that bookkeeping companies and large US companies move money to daughter companies to save taxes at the end of December. So over a 50-year seasonal chart, what you see is the dollar index falls into December and rises out of January. So that means as the US dollar is heading towards Christmas, the seasonals would anticipate dollar weakness. Now, we also have the Federal Reserve meeting on Wednesday. Now, with the Federal Reserve meeting on Wednesday, we would anticipate further dollar weakness because the Federal Reserve is expected to weaken. So this means there is a trade setup potential for people to consider as long as that situation remains the same. And that is the following. If you look at the dollar index, you can see here that this is a Harami inside bar. Okay, it's a bearish Harami inside bar, which means you can expect, typically, the way this technically works is you can see this is a Harami inside bar, bearish one. You have a break, move lower. This is a Harami inside bar, break, move lower. This is a Harami inside bar. You'd expect a break, move lower. Now, the way traders typically trade this is that they would put their stops just below the recent high. So personally, I entered a short here at 90.50 odd region, 90.57, sold on stop. My stop's just running above the highs, and I'm looking for a run potentially somewhere down to this 89 region. So typically, that's where we'd expect to move back down to that 89 region and just expect profit takers as we hit there, about 89.50 and below. Yeah, so 89.50, 60, you'd expect to find profit takers on a move down to into that level. Just wanted to highlight that potential reason. There's fundamental reasons for dollar weakness, seasonal reasons for dollar weakness. So dollar weakness into year end does make sense. So that's the major sentiment that we've got in the market. Now let's go have a look at the what we have ahead. Now I'm going to go back to the main screen. There's one thing I want to show you around with the pound. Okay. Now in the pound, we can see that there's three major stumbling blocks, and the two major stumbling blocks at the moment is fishing and state aid. So what we're looking for is if the state aid, the level playing field, if that is solved, that issue is solved by the end of this week or the end of today, that will be very positive for sentiment for the pound. So the key issue here is that state aid issue. Fishing is also an issue, but if state aid gets sorted, then fishing should get sorted as well, because state aid is the major one. And this is all to do with the fact that if the UK is independent, will the UK ensure a level playing field with the European Union, or would the UK be giving unfair advantages to UK companies through the use of government policy? That's what the issue is. So it's a political game, but it's also a competition issue. That is a contentious issue. So you can expect there to be some shenanigans in Brexit negotiations regarding state aid, but this is the key issue to be looking at. We see a breakthrough in state aid, expect pound buying to accelerate. But remember that I want to show you something. I'll go back over the chart. Remember something very interesting here. If you take a look at the pound, what you notice about the pound is that we have seen strong pound buying since the summer of 2020. Now, the summer has seen pound buying because market participants really do favour more upside in the pound on the optimism of a Brexit deal. So the market was moving higher because people were expecting a Brexit deal to happen. That's why we've seen the pound gaining value. Now, this is a lot of buying. So what it means is that most people who bought the pound are already long the pound. So watch out for a buy the rumour, sell the fact response. If we get a sudden deal that is suddenly announced, don't be surprised if the pound shoot up and then sell back down. So watch out for a buy the rumour, sell the fact response on a deal. As long as we've got the anticipation of the deal, we would expect pound buy-ins. But once and if the deal is arranged, look out for a buy the rumour, sell the fact response. It happens all the time in the markets, and we saw it happen recently with the Conservative votes. Once the Conservative Party got in, we suddenly saw the pound have a buy the rumour, sell the fact response. It was in 2019. So don't be surprised if you see another buy the rumour, sell the fact response. We've got some key resistance up here at that 1,400 level. Okay, so be watching out for any sort of false breaks at this level. Certainly be very aware of that. Just wanted to point that out to you. Right, without further ado, let's have a look at the calendar for the week. Very a slow start to the week. We've had some sight deposits out of Switzerland that I've just covered, industrial production. Slight pickup in industrial production for Europe, which is excellent. But remember, with London about to go into a tier 3 lockdown, Germany having a Christmas lockdown, the European recovery is, certainly on hold. And don't be surprised if the further shutdowns drag on the European economy going into the first quarter of 2021. But it's been a welcome sign to see industrial production pick up this morning. So that is a positive sign for Europe. And there's broad strength across the board in the industrial production segment. It wasn't just German industrial production that was supporting things. We also have some very light data coming out on Tuesday. There isn't really anything particularly to note here coming out on Tuesday. A few very minor data points. Earnings for the UK, that is just not in any focus at the moment because of Brexit negotiations. We also have CPI data out of France. Now, European inflation is important, but we know that European inflation is just really, really depressed at the moment. So expecting further depressed readings out of France, just to reflect that, low depressed CPI data. But obviously this is just for France, so it's not indicative of the whole European nation. Central Bank Speaker Matt Glenn speaking. There really isn't much going on in Canada at the moment. The last Bank of Canada rate decision was more of a holding decision. There was very few surprises. Asset purchases carrying on at the current pace. interest rates remaining the same. Interest rates in Canada are expected to remain at their current level for the next 3 years, in line with the Federal Reserve and the Reserve Bank of Australia. It seems to be a bit of a mantra that central banks are repeating, so nothing much expected from Bank of Canada's Matt Clem, but always be aware of it. Little tip, anytime you have a central bank speaker speaking, it's always worth paying attention. They can sometimes give some tradable opportunities there. Wednesday, we start to see more CPI data out of the UK. Again, it's barely going to move the pound due to Brexit negotiations. But we do then have some PMI data points coming out for Europe. Now, these are more important. Looking particularly at the German manufacturing PMI. German manufacturing PMI has been very strong recently, showing some good rebound. So the market's going to be looking at the services and the manufacturing PMI just to get a sense of how the German sector is doing. If we see that picking up higher again, that's going to be good for risk sentiment. And obviously the market's going to be weighing in the latest COVID-19 outlook for Germany alongside manufacturing. The broad picture is that there is a recovery underway in Europe, but it's going to slow down for the first quarter of 2021. So that's kind of the basis of the market. It's looking at anything that's good in these PMIs. Anytime we exceed expectations, that's going to boost sentiment. So definitely want to be looking out for. Looking at OPEC meetings, December the 16th. Watch out any oil traders. Be careful of any changes to production levels. That has a tendency to move oil. So just watch out for that if you're trading oil. Retail sales. Now, the US consumer, about 70% of all of the US's GDP is driven by its consumer. So retail sales are very important. So retail sales have the ability to move sentiment. Now, later on in the Wednesday, we have the Federal Reserve meeting. So the key event is not going to be the retail sales on Wednesday. It's going to be the Federal Reserve interest rate decision. The Federal Reserve basically said they're going to keep interest rates at 0.25% for the next 3 years till 2023. But they are expected to potentially be more bearish. Now, there's one trade that I'm potentially looking at, and it's on gold. Now, looking at gold at the moment, there is one strong seasonal feature that is coming up. Let me just see if I can find it for you. I'll see if I can show you. Now, do check out this video here. I'm going to send it to you. If you haven't seen this already, take a moment and look at this video, because what it does is it gives you the strong seasonal outlook for gold, okay? So I'm just going to put this now in the chat box. Have a look, check out that video. Now, one of the things I draw on is the seasonal insight for gold, and this is a report I did last week, and I'll show you this. Just gonna pause it for you. What you can see here is this is the moves in gold from the 16th of December to the 24th of February. And what you can see that over the last 10 years, gold has gained 8 years out of the last 10. You can see the gains. And the maximum gain has been 16.32% in 2015. The largest loss was in 2012. Now, if you've taken each of these trades, 80% of them would be winners, with the maximum gain outselling the maximum loss. Now, that reason for gold strength is important. It is due to seasonal strength in the gold market. Now, the reason for that seasonal strength is that China, which is the world's largest gold buyer, celebrates the Lunar New Year, and one of the traditional ways of celebrating the Lunar New Year is through the giving of gold gifts. That's why we see gold prices going higher into the year end. Okay, so because of this, what you need to be aware of is that from about this week and next week, there's strong seasonal reasons for gold strength. Right. So now you understand that point. If we go over to the calendar, we see that the Federal Reserve is meeting. Now, this is where it gets interesting. If the Federal Reserve indicate that they're going to do more easing to support the economic recovery in the US, that will weaken the dollar. Weakening the dollar tends to boost gold. Now, if you see gold and the US dollar, they tend to have an inverse relationship. So when the dollar weakens, that strengthens gold, okay? As the dollar strengthens, that weakens gold. Let's just have a little look if we can overlay the Dixie. So you can see here, like as the dollar weakens, gold strengthens. As gold weakens, the dollar strengthens. So if the Federal Reserve do something to weaken the US dollar, if they ease further, or if they add more quantitative easing or increase the paces of asset purchases, anything that weakens the dollar, you can expect some gold upside. Now, that is tying in for those strong seasonals. So look out on Wednesday for anything that's very bearish from the Federal Reserve. Now, at the moment, gold's under pressure, and we can see that we've got bearish, so we don't want to get in early. We want to wait till Wednesday and see what the Federal Reserve do. And if the Federal Reserve have done some important things to weaken the dollar, we know that there's strong seasonal patterns for gold. So that's one commodity that I'm looking very carefully at, but I don't want to enter now because of the dangers involved in that. Another commodity with a very similar outlook, I haven't got time to go into it now, but I'll just show you on my blog, is the outlook for platinum. Okay, if you look at platinum, what you can see here, I will, if you're not checking my blog out, make sure you do check my blog out. I've got some really good material I put up there every day. Do check out that platinum position as well. Okay. Okay, excellent. Now, let's go to the next risk event, but that's a key one to be looking out for on Wednesday. Thursday, we've got SNB monetary policy assessment. They haven't changed their interest rate in years, so no change expected from the SNB, but obviously if they do change, expect a large move in the Swiss franc. But they are the central bank with the lowest interest rate in the world, minus 0.75%. So some very large institutional accounts, you actually lose money for depositing money with the Swiss National Bank. So you might say, well, why do you deposit money in the Swiss National Bank? Well, the Swiss franc tends to appreciate in an environment where markets are concerned or worried. So strength in the Swiss franc is, a risk that people want to take the negative interest rates just for holding Swiss francs. I know this is large investors with huge accounts, so it doesn't affect your retail traders. Interesting, we've got the Bank of England rate decision. Now, this will be interesting whether we get a Brexit deal or not. If there's no Brexit deal, technically the 17th of December is still before the deadline. The deadline for the Brexit arrangement is the 31st of December. So if there's no Brexit deal, then expect this meeting to be pretty uneventful, because the Bank of England are wanting to keep any decisions that they need to make in terms of changing policy most likely till after Brexit is arranged. They should know by the end of the week, of the year rather. So they might save any decisions for the next interest rate decision. But obviously, no interest rate is expected. And you can see that interest rates have been very low all 2020 at this 0.10 level. Now, one thing to be looking out for is if we get a surprise interest rate cut, look for a strong move in the pound, okay? So if there's an interest rate cut, look for pound selling. That's one to be aware of. But be aware that if Brexit is still not arranged, then Brexit negotiations will take precedence over that Bank of England rate decision. So that's something to be aware of. Heading into Friday, we've got the monetary policy statement out of Japan. There's not particularly much expected there. Do keep an eye on it because it is a monetary policy statement. Again, the Bank of Japan have had their interest rates, they've had them low. They've had that in negative territory. You can see here for a long time. You can see here negative territory for years. So the Bank of Japan are expected to maintain interest rates at that negative policy rate. In terms of other events to be looking out for in the market, it's obviously the US stimulus bill. So as long as the US stimulus bill, it looks like being agreed, expect that to support equity markets. So expect US futures markets to be finding buyers on dips as long as the stimulus bill is still being arranged and is still being expected. So that's another very key one to be looking at heading into the end of the year. So important and definitely one to keep looking at. Don't allow that to slip by you heading into the year end. US stimulus bill is going to be important, definitely one to keep your eyes on. Okay, that is the main things that are due for the week ahead. I hope that is helpful. And I am away now till the new year. So I won't be back now until the second Monday of January, because we've got a UK bank holiday on the 4th of January. So I'll be back here on the 11th of January. So I do want to take this opportunity to wish you all a very happy new year. Thank you for those of you who've been supporting me through the year. It's great to have had you. Yasser, Warren, Tribuvan, it's been a fantastic year. Kingsley, thank you all very much for your help. And yeah, I'm on a trading break, Warren, that's right. And I look forward to taking us through with some new strength into the new year. A little seasonal thing to be looking at is the DAX tends to rise in the new year. So watch out for that. I'll try and do some updates on my blog for some new year trading ideas. So do keep up to date with my blog and I'll try and have you guys in mind. Thank you all very much for coming. Andrew, Lenny, Alanka, great to have you. And I can't wait to be back for a new year, God willing. Happy New Year to you all and safe trading. Thanks now, guys. Goodbye.